as a component you're paying goes to your protection fund. You won't get it back unless you claim. So people should understand why they are putting money in insurance. You get of course a majority if it is a universal or a product like a participating product bonus, you will get a sizable maturity value, but you can't ever compare your investment amount premium, total premium versus the return, because then if you don't, you are not getting the insurance concept right, because you have to have a risk premium, otherwise insurance companies also will not survive. So some time back we have learned our lesson as industry with unit linked products. I think 15-20 years ago, a couple of companies came up with unit link, and we sold a lot of unit link as an industry, but we failed miserably because our market, our customers, they don't have a discipline of waiting and see a yield after 10-15 years, because in a market with a very volatility, interest rate hovering around from 4% to 30%, you can't have unit linked products in this market. If the interest rate is a very stable, settled interest rate, then of course then we can think of bringing unit link again. Otherwise, it's not a concept here. But having said that, universal product or bonus products, parts products are the predominantly the selling product in this market at the moment. But it is unfair from the insurance company's perspective. If customers are expecting a similar return if they put it in a bank account versus an insurance account, completely different concept, because you have to understand for the protection aspect. But going forward, I would say, to answer your question, companies will more focus on protection element than investment, because this IFRS 17 accounting standard has already been implemented and we have to comply. So there you recognize only the protection premium as your revenue. So we don't have a choice, rather pushing more into protection business in this market. Otherwise, we can't, as companies, we can't survive. And from the customer's perspective also, when we pay more living benefits, more claims, the experience will become a motivation for them to buy insurance and take this message across, because you will feel the value of insurance, rather putting money and expecting something after 10-15 years. That's not the game here. Insurance is a very, very novel concept. We are taking your stress, we are giving you a peace of mind, and the real insurance is all about protection business, and we don't have a choice. Eventually we will all fall in that path, and protection element will definitely increase in next 5 to 10 years.
By distribution, and if you take, for example, our agency distribution, when we sell, let's say 10,000 rupees, at least 50% of that goes to a protection kind of rider. It's a health, critical illness, one of those covers. So, and that you're not getting your money back, but you are covered if that event happens, and if there is a health situation, you basically have a claim, and then we pay that claim. So, whilst there is definitely the concept that customers want to have some return back on their funds, it's also equally important if we are in the protection business, if we are in the insurance business. Insurance by its very word is protection, right? I mean, that's what you go to an insurance company for. So we have focused almost a strong emphasis in terms of actually providing protection in terms of our policies. So like I said, on our agency side, at least 50% is on health, critical illness, that type of thing. If you take our other channels, we have also a very strong concentration on health. We are the market leaders in the health insurance space. We have about 35% market share there. And just to, I think, mention a couple of other things that Lasta picked up on earlier. So it is not an easy thing to do, right? But at some point you need to also take perhaps a bold stand, a bold decision, and move forward with it. If you look back in this market to maybe 7 years ago, so Rasit also was with us, same team at that time. And when we looked at the health insurance space, uh, yes, the reinsurance companies were covering health, and what we realized as a company was, when we look at that whole space, everybody is getting the same product, right? Everybody is getting the same product because the reinsurer is giving the same product to everybody. But what that does is that we are all tied at the hip. None of us can actually move out or venture out of that space. So at that point, then we took the decision, okay, we're going to drop the reinsurance, we're going to go net, and we are going to push forward into that space. And we are the market leader in this space, right? So I think the main thing is, once you get to that point, you can change your premiums, you can any kind of excessive claiming, you can cover those things. You can give good standards in terms of the claims payment space, all that type of thing. But you need to get to that scale. Without getting to that scale, it is you have to then be careful. So I think just getting back to what the question was, insurance is about protection. We have health, which is a big component of that protection space, and I think what we need to now look at is the whole retirement and that protection gap, and how we address that through either annuities or whatever decumulation kind of products. As I think you already know, we just launched from SoftLogic Life what we call Health for Life. Right? So this rider that we have put out is you buy the policy at 35, 40 years. You have that for the rest of your life. Right? It doesn't stop at 70 or 80. Right? We are being brave about this. We think we can price it. We have 15 years plus health insurance data. We are confident about that data. We know what we can offer, what we can price. Health insurance are also annually renewable, right? If the whole portfolio changes, the price changes every year. So I think we are being. I think we also want to look at society and what we give back to our community. So we've taken that step. Health for life. It doesn't stop at 70 or 80. For as long as you live, we will basically give you a health cover. So I think that's a big step that we've taken as far as protection and the product mix.
Thank you, Mr. Iftikhar. So in these answers, like element of IFRS 17 implementation and new framework being discussed. So I want to have some more color on that. So how the new framework will change the profits being recognized and liabilities being valued, and overall how the performance will be changed when the reporting framework changes.
Right, I'm not the expert on this, and I don't know whether any of us are, but anyway. So IFRS 17 is primarily aimed at the insurance industry, right? It is about trying to make the insurance business transparent, where the performance of an insurance company can be stated very clearly. So IFRS 17, I think in layman's terms, is about what they call a CSM, right? Basically the margin of that you have on insurance. It is similar to if you take a banking book, it's like a net interest margin, for example, you just broadly compare. Right? So if you have more protection-based product or more high margin products, your CSM will be higher. If you have more investment-based products, I think your CSM will tend to be lower. I think from a broad perspective, that's I think how it will play out. Having said that, I think for the first time when you translate into IFRS 17, you can make certain choices in terms of how you want to record your business. Once you make those choices, you can't change them along the way, or you can't change them very frequently. So how companies will pick those choices is going to be crucial, because I think everybody will also want to see what was my performance in the past. As soon as I adapt this, there can't be a big deviation from what it used to be previously and what it is going to be for the future. So I think IFRS 17 is a good thing. It is supposed to bring the transparency and bring out the margins and the value of insurance companies. Hopefully the insurance companies on the back of this transparency, we'll also be able to attract capital, which I think we need. And if you look at these protection gaps, and if we then look and say that IFRS 17 is going to drive the insurance sector also towards more protection margin-based products, right, which is likely to happen, then it's it's a win-win. So let's wait and see.
Thank you, Tikus. Over to you.
Yeah, I think yes. I think at the moment now, how we generate surplus is from a life business kind of a black box. Even only actuaries can understand. So, but going forward with IFRS 17 as it will be really transparent from investors' perspective, customer perspective, insurance company's perspective. You can compare each and every insurance company. Everything you can compare. I personally believe it is really good. So then, even customers can really, understand what the insurance companies are doing with their money and all those things. And more and more protection, as I said earlier, more and more protection business actually is the way forward for us. There's no other way because only we recognize, as I said, the protection element of the business. Say, if you sell 100,000 policy, if your protection premium is 30,000, you recognize only 30,000 as your revenue. Balance 70,000 you won't recognize as your revenue. So then this is how we, current at the moment we have a GWP based market share competition in the industry going forward. We never know. Company will have different strategies. Each and every company will define their way of reaching the market. Maybe GWP based, maybe CSM based, maybe asset based. We never know. We are waiting how we are going to compete with each other. But having said that, more than the competition, how you generate a better margin. End of the day, it's a business. It has to be win-win. From the customer should win, and also company should win. Because end of the day, we have to generate profit. So from both perspective, I think I really like this IFRS accounting standard. I think from even overseas investors' perspective, I think it will have a lot of transparency, and then they know what they are doing, what they are investing in. So we can attract more and more foreign investment also into the industry, which will eventually help us to double, triple the size of the industry, and most of the multinational players will come with IFRS implementation. And so therefore, I think we are very positive about that. And we're supposed to go live from 26 January. We never know. There are various concerns, but within next couple of years, we will go live, and then it will be a completely different game going forward.
Thank you, Mr. Lasith. Over to you.
Just as Lasith mentioned, none of us are actuaries, and it's best answered by actuary. But in the simplest of if I take a very simplified explanation, today SLFRS 4, you look at a company's top line GWP as a total premiums collected. It has no correlation to how much value that brought in. So it's just a collection of all premiums. And if you look at how an insurance company shows profitability, it looks at your assets and looks at how much excess cash you have over your reserve liabilities and declares it as profit in the simplest of forms. And it's not as simple as I make it sound, but that is a simplified approach. Now, a company that keeps growing may not necessarily be able to show profitability because you have something called a new business strain. So a company that grows at 20-25% may have flat bottom line growth. And so this creates problems for analysts to review a company, for customers to view the stability of a company, and investors to view the stability of a company. This is where IFRS 17 really transforms the game. So the whole GWP concept will be replaced by something called insurance services revenue. Where insurance services revenue is still driven by the premiums you write. But however, it factors not just the premium you write, but the value you create through your premium. That's where the margins become important. So it is how much margin you create out of the premiums you write. And whatever you write, the future profitability of each policy you write goes into a vault called the CSM. Now, this is a game changer because as an investor, you are able to look at the size of each insurance company's vault. What is the future profit release capability it has with it right now, right? And from this vault, you write back into your P&L as and when you service that policy, including the first year. Right? So this gives a very transparent view of how an insurance organization is reviewed, performance is reviewed, and it becomes easily comparable within the industry, and also it becomes comparable even out with regional players. Now, as we discussed in the forum, this alone will be able to attract a lot of foreign investments into the life insurance industry, because your P&Ls are now more transparent and comparable with regional peers. Even as a customer is able to really review the financial stability of a life insurance company. Because unlike many financial services sectors or non-financial services sectors, we do not sell anything tangible or immediate. As life insurance companies, we sell you a promise. We sell you a promise that may be delivered in 30 years. That is where financial stability of an organization becomes pivotal. And IFRS 17 will really give a very transparent, accurate view of an organization's health. Your CSM, that is your vault, how fast is your vault growing, and how much of that vault are you writing back into your P&L. Now you can have a big vault, but if your expense ratios, if your policy lapses are taking a nosedive, we will not be able to write all of them back into your P&L. So that sort of visibility and transparency will help build confidence in the life insurance industry for investors, the government obviously, and as well as life insurance customers in the long run.
Thank you, Saina. And this will be my last question in the moderated session. So, as the industry evolves, do you see consolidation gaining momentum in Sri Lanka? And beyond domestic market, do you think expansion into the regional markets is the next growth avenue for the Sri Lankan life insurers?
Well, I will leave it to some of the panel members to answer that. But in terms of union assurance, we as an organization take a view that this industry is still a heavily underpenetrated industry. Right? There is a lot more upside for this industry that is not really harnessed. And that harnessing that potential is a priority. However, with again the change in the IFRS 17 standard, the solvency standards will also change in the long run. With that, we may see situations where consolidation may happen, and that is limited to that of each organization's strategic focus, even expansions outside of the country. But I think whilst expansions overseas will happen, I think what is more probable is investments into this country, into this industry, to harness the value and potential in the industry, because this is a heavily underpenetrated industry compared to every regional benchmark. Thank you.
Yeah, actually yes, that's the point, because I know we are having different strategies as organization, but within the country we have a huge potential, 0.6 to maybe 3%, but we are talking about 6 times the growth. So therefore we have ample opportunities to expand within the country, for sure. We have to come up with strategies, and we are doing that. You heard that, the roadmap and everything. That's one side. On the other hand, company specific, other strategies, overseas expansions, even as HMB Life, we have plans. Of course, various plans to getting into other territories, especially how to capture your diaspora, Sri Lankans who are living abroad, with the aim of coming back, retire here. There are a lot of people who are living outside, but the ultimate objective is to come back to Sri Lanka and retire. So we are targeting those markets and looking into with the bank. Of course, HMP, we are trying our best to expand, because we have recorded 30% CAGR during the last 5 years, and even this year itself more than 50% growth. So we are growing, and yes, and also if I talk about the consolidation, also I reckon life side I don't see much, because we have 14 companies all are doing well, and maybe very small players, but still I don't see in the near future, but GI side maybe because there are 15 GI companies and GI business is very hard. Probably there could be a few considerations. I think we have already heard one. I think the best person is if they can talk about those expansion and they have already done big things and about you. So that's from a HMB perspective. I think we are of course we are growing and we are expanding big time.
Thank you.
Yeah, so thanks. So I think when you look at this whole spectrum, and if you take the SoftLogic life story, we've grown tremendously. We've grown 10 times in 10 years from 2014. Last was that? 3.5 billion top line. In 10 years, we got into 35 billion. Last year, we crossed 40. And now we are at the top of the market. I think just 19.3, 19.6% is the kind of market share difference. So I think you have to ask yourselves the question, what do you do after that, right? Because yes, we also believe that Sri Lanka has ample scope. It is under-penetrated market. The numbers basically tell you that. So there is not going to be any lesser emphasis in terms of focusing on the Sri Lankan market from a SoftLogic Life perspective. But I think what's important is to look at what's out there and what more can you do and what value can you bring for your stakeholders. And in that sense, if we have the talent, if we have the capacity, and if we have the propensity to step out of the shores of Sri Lanka and to capture an opportunity in another market, by all means, we should look at it. So, as I think we've announced our entry to Bangladesh. We've essentially bought a license, a small company, because the growth of that business is basically our opportunity and our challenge. Just give you a simple example. The market leader there, I think, the market leader there is MedLife. They have about 25% market share. Their top line in healthcare terms last year was 80 billion healthcare. Right? This year, probably Seninco and SoftLogic Life will cross 50 billion. Right? So the penetration there is about half of what it is here, 0.3%. So the propensity and the opportunity to actually improve scale, and insurance is a financial services business, it's a scale business. Right? So the opportunity in markets where there are bigger populations, right, is tremendous. But I think the main thing is that you have to know what you have with you. You cannot overextend yourself. You need to play within your expertise. So for example, if you take Bangladesh market, health insurance is non-existent. Right? So we are looking at that like the person who went there to sell slippers and says no one is wearing slippers. Right? So from that perspective, we think there is a great opportunity to go into a market like that. And I think if you take also the perspective of Sri Lanka and Sri Lanka's exports, right? If you look at the crisis and the problems that we've had, what are those problems? Those problems essentially stem from the fact that we don't have exports. We don't have enough foreign currency coming back to the country. So if we are able to enable that, right, in a different form, right, in terms of exporting our talent, in terms of making investments outside Sri Lanka, and being able to grow assets that belong to Sri Lankan companies, and then finally making profits and repatriating them to Sri Lanka, that's one of also the key value drivers that we can actually achieve, and that we can give back, or that we can achieve for the national interest. So if you look at that, maybe there is scope to do one more or two more, but I think the important thing is to do the first one, do it well, and then use that as a case study for perhaps a kind of regional play. So it is all about scale. Sri Lanka has 22 million people, right? So Bangladesh has 180 million people. So similar to that, if you have the talent, if you have the capacity and the capability, by all means we should look at how we can scale our businesses and basically make value for our stakeholders.
Thank you, Iftika, for your thoughts. So that brings us to the end of our moderated session. So I open the floor for questions. Audience may raise their hands and ask questions.